Hello and welcome from Trend Signal for our review of data and events the week beginning the 18th of August. Before we review what's happening this week, let's just a quick check on what happened last week. Stock markets had a fairly positive week, more risk on as equities recovered, with the FTSE up 122 points, or just short of 2%. The S&P in the States, that was up 24 points, or 1.25%. Same with the Dow, up short of 100, about 0.6%. DAX has still not recovered much, although it is up sharply on Monday, about 1.5%, but last week up 60 points, or just over 0.6%. Dollar had a fairly mixed week, with a fairly unchanged move against the euro. Sterling continues to fall, although news over the weekend has given it a little bit of a lift. And other markets, dollar yen and Aussie dollar, slightly up on the week. Other big moves, gold was off $6 as the risk on sort of intensified toward the end of last week. But crude, still very, very weak. Brent crude off another $1.50 on the week. That's just under 1.5%. In fact, it's that crude story that on the back of increasing or a lowering in demand forecasts and an increase in supplies, which has caused the market to fall, which is all the more remarkable bearing in mind the events that are happening in Iraq and in the past Gaza over the last 3 weeks. Despite all the recent moves in equities, it's not all rosy though. German business confidence fell sharply last week, and French and German GDP also missed consensus, with Germany slipping to a surprise negative 0.2% GDP fall. FX markets, as I said, we saw the dollar move sideways. Really the debate is raging over when the US may raise its interest rates. In fact, sterling has been caught in the same spotlight because of that argument, as the Bank of England inflation report last week suggested that the first rate rise was still some way off due to the slack in the economy, which was most notably the failure of wage growth to keep pace with inflation. Anyway, all of this seems to have been contradicted somewhat over the weekend, as article in the press suggested that the Bank of England's Mark Carney would raise rates before wage inflation had taken hold. So what does this mean for the markets and sterling? Well, cable has been weak, as we all know, as rate expectations have been pushed back, which is one of the reasons why we've seen sterling fall quite sharply over the last month and a half. However, news over the weekend has sort of dented that a little bit, and sterling has recovered a little bit. It is a bit sort of contradictory, but I think Mark Carney has probably played quite a good hand, to the extent that he needs to keep rates low until such time that the Bank of England wants to raise them. And I think if you do telegraph that you want to raise rates, then the market will immediately discount that. So it's a bit of a balancing act, and I think it's a balance that Mark Carney seems to have achieved quite well. So overnight, Monday morning, equity markets rallying again, as I said. Move to risk on carries on from the end of last week. Really, as I said, the DAX is up just over 1.5% as global macro events seem to calm down. Data and events this week. Let's have a look at our Forex factory calendar. They include the minutes from the Bank of England and also from the Federal Reserve's FOMC, inflation data, and something called the Jackson Hole Symposium, which I'll mention right at the end. Let's just have a look at the data that's coming out then. Really, we have to wait till Tuesday for the first key data, which is the inflation data out in the United States, CPI, coming out at 1:30. No threat with inflation whatsoever. Inflation expected to be very modest at plus 0.1%, the core plus 0.2%. No issues there at all. Then we jump to Wednesday, where we have the first of our minutes from central banks, from the Monetary Policy Committee here in the UK. Be interesting to see if there are any dissenters on the committee. There were rumours to be. We'll get details of that published at 9:30 on Wednesday. That can have an effect on sterling, on gilts and the stock market. We then jump to 7 o'clock in the same day in the evening, where we have the minutes from the Federal Open Market Committee from the Federal Reserve, the Central Bank of the United States. perhaps give us a clue as to what the committee and Janet Yellen are thinking about the timing of rate rises and other such matters. Then Thursday, we've got the manufacturing data report, starting with the one from HSBC reporting on China's manufacturing PMI. We then have French and German. Retail sales from the UK at 9:30. And then the Philadelphia Fed Manufacturing Index at 3 o'clock, an important piece of data. Also on Thursday, we have the start of something called the Jackson Hole Symposium, sometimes otherwise referred to as the Bank of Kansas City Economic Symposium. The reason why I mention it, it's a lot of all the great and the good in the banking, central banking world, etc., get together in Wyoming to discuss all such matters. We have some key speakers actually on Friday. At 3 o'clock on Friday, we've got Janet Yellen speaking. It's about the labour market in the States. And then we've got the president of the ECB also talking there at 7:30 in the evening. Hopefully that won't be affecting any of the markets, because we'll all have finished for their week, except for the odd straggler still trading the US markets on a Friday evening. Not my chosen way, having said that. That's a summary of the events coming out this week. As I said, steady as she goes. A little bit of risk on occurring now as equities continue to recover. I suspect we'll probably have to wait until Wednesday, Thursday and Friday before we get any impetus to this market. That's it. Thanks very much for listening. Back again on Thursday at 8 o'clock. Bye for now.